Well, a warm welcome everyone. I'm Joel Carty and today I'm bringing you the November 2024 Investment and Economic Snapshot, brought to you by Solace Financial. Let's dive into the key highlights and what's shaping the markets this month. In November, equity markets surged, with US and Australian shares posting impressive gains. The standout catalyst, Donald Trump's resounding US election victory, which sparked renewed investor optimism and propelled the S&P 500 to its strongest monthly gain of the year, up 5.9%. The Australian All Ordinaries followed suit, climbing 3.7% to hit fresh all-time highs. Sectors like tech led the charge, surging by 10.5%, while utilities and financials gained over 9%. However, materials lagged, dipping by 2.6% amid softer commodity prices. Globally, the MSCI World Index rallied 4.6%, thanks to strong US performance, but not all markets celebrated. Emerging markets took a hit, dropping 3.6%, as investors braced for potential tariffs and trade isolationism under the new US administration. European markets faced pressure as well, with the Euro 100 index barely holding steady, just up 0.1%. On the commodities front, gold retreated 3%, closing at $2,659, driven by a stronger US dollar. Meanwhile, base metals saw mixed results. Copper dropped 5%, but iron ore rebounded slightly after October's slump. In bond markets, we saw some fascinating moves. US bond rates initially spiked post-election, but ended the month on a positive note, where the benchmark 10-year Treasury yield fell by 9 basis points to 4.19%. This was helped by the appointment of Scott Bessent as Treasury Secretary, signalling potential fiscal prudence ahead. Here at home in Australia, business and consumer confidence rose sharply in November. Consumer sentiment reached a 2.5-year high, while unemployment rate held steady at 4.1%, and inflation trends showed signs of stabilising. The Reserve Bank of Australia hinted at rate cuts next year, but only if inflation continues its current trajectory. For now, it's a waiting game. So what's the outlook? Equity markets are riding high, buoyed by optimisms of expansionary fiscal policies like tax cuts and deregulation. However, stretched valuations mean markets could be vulnerable to economic disappointments or policy missteps. Meanwhile, bond markets may feel the heat if fiscal spending ramps up, placing upward pressure on inflation. As always, I'm here to help you navigate these shifting tides. At Solace Financial, we focus on turning complexity into clarity, ensuring your financial strategy aligns with your goals. Thanks for joining me for this month's snapshot. I look forward to seeing you again soon. Stay informed, stay empowered, and remember, discipline equals freedom when it comes to your finances. Until next time, we'll be watching.